Editor-at-large at Kraken, the best place to buy and sell Bitcoin and cryptocurrencies. And I'm your host for this special edition Kraken live stream. The occasion to mark Bitcoin's ascent over 18K today, a price that has stayed above for just 3 days in its near 12-year history. So I'm joined today by Sui Chung, Chief Executive Officer at Kraken subsidiary CF Benchmarks, the first FCA-authorized cryptocurrency benchmark administrator. So Sui will be joining us shortly to discuss his outlook on the market for Bitcoin and cryptocurrencies. But first, highlights from our October Kraken Intelligence monthly report, which you can download for free on blog.kraken.com. So why is Bitcoin surging on the month? Our analysts have highlighted three reasons. First being hodler accumulation, roughly 70,000 Bitcoin left wallets holding over 100 Bitcoin during the October month, suggesting larger whales were engaged in profit taking. However, demands from wallets with under 100 Bitcoin offset those sales. Second trend would be an end to technical indicators. As of October 31st, Bitcoin had been trading above $10,000 for 97 consecutive days. This meant the asset was entering rarefied air, and that past price histories may no longer be a useful guide for even the savviest crypto traders. Last trend is institutional adoption. Grayscale reported record quarterly inflows of $1 billion in September, while Square announced a $50 million Bitcoin purchase, and PayPal revealed it would allow users to buy and sell Bitcoin, developments that provided no shortage of positive news for the market. So once again, you can download the report, surprise, surprise, higher highs on kraken.com and access more free intelligence there. So now our guest, welcome, Sui.
Hi, Pete. Thank you very much for having me.
Yeah, let's dive in. So obviously the market in a bit of a cooling off period, maybe after several days of robust activity. Why don't you give the viewers here your take on what does this market look like? How has the composition changed? What's the state of the market today as we look at the November 19th market?
Yeah, thanks, Pete. So it's really interesting that, we're hitting those, as you mentioned, 18,000. Bitcoin has only managed to stay above that price for 3 days in its entire history. And obviously, everyone's mind is going to go back to the heady days of 2017. And really, I think it pays to think a bit more deeply about how the market is today relative to what it was like in 2017. What's similar, what's different, and maybe we can glean some interesting intel from that, and it can inform how we think about the market regime that we're in today. So yeah, I think the first thing is to think back to 2017 and how what was driving that, and that was very much the first real big wave of adoption where we had new addresses were being created at an unprecedented rate, and people were buying into the market. But the market as it was then was very much a spot market on venues such as Kraken, where people could buy and sell Bitcoin. We fast forward to today, though, and we're in a much more mature marketplace where there are multiple ways to access Bitcoin, some of which you just mentioned in your intro, and also seek exposure to the Bitcoin price through derivatives.
Well, let's dive in, I guess, and talk a little bit about how that structure has changed. So you mentioned derivatives versus spot. I know this is something that has come up in other Kraken intelligence reports that you can find on our website. But this is a big development. In 2017, it was mostly retail traders trading, as you say, on spot exchanges. Maybe for people who are really new, they're just enticed by what they're seeing, on the price and on the charts. How does that actually change the market? And how does it change the price of the assets?
Sure. So when we look at derivatives, we're predominantly talking about futures contracts, and there are multiple venues to trade futures contracts that track Bitcoin. There is a Kraken futures platform, well-known platforms such as Binance Futures and BitMEX. But also there is a traditional financial venue, the CME, which also lists Bitcoin futures contracts. And what we've been seeing is, as that marketplace has developed, as that derivatives market has developed, that it allows, what it effectively allows is for people to seek synthetic exposure to the price of Bitcoin. So it's no longer going to an exchange such as Kraken, or through wallet providers and acquiring Bitcoins, but it's actually entering into a contract with a counterparty, to that will that where the contract has a payoff relative to whether the price goes up or down, depending if one is long or short.
Hmm. Interesting. And so that means essentially that people could speculate on the price of Bitcoin in the future at future dates, something that they weren't able to do before. But we've seen that the volume of that has increased, right? So, or I think we're dealing with now where, you know, before it was just retail traders. Now it's there was some period of retail and now derivatives, or now more complex financial products. Do we see that these futures products, are they really what's driving this, or are they sort of following demand? What do you think is the lead in that category?
I think that's a great question, Pete. And we'd all love to know. But if we look at the evidence out there, and we look at what's changed over the past sort of 2 month period, that has, when Bitcoin has gone from roughly about 12,000, it was trading between that sort of 9 to 12,000 range for a number of months, from about, I'd say about May time through to September, late September, it was in that range, and then in the past sort of 40 days, 2 months, it's really shot up. And what we see, the real change has been the volumes and the open interest that we're seeing on the CME. Now, as I mentioned, the CME is the world's largest derivatives marketplace. It's a traditional financial venue where people trade derivatives contracts on things like stocks through the S&P 500 futures contract. They trade interest rates through the euro dollar contract, and a host of other oil contracts, etc., a host of other instruments. They've had a Bitcoin contract since late 2017, and just this week is the first time that they've had over $1 billion traded in a day, in one daily trading
Hmm,
session.
hmm,
And what's known as the open interest, which is the derivatives term for basically how much is being staked, so how much is at stake at that moment in time, of over $1 billion. And the CME futures contract is a little different from those that we see on BitMEX and Binance and indeed Kraken futures, in that the contract is denominated, per contract is for 5 Bitcoins. So that's roughly speaking about $90,000 at today's prices. So the size of that contract, you know, prohibits the average retail trader from participating. So it is an instrument that is mainly utilized by institutions. And what we've seen over the past 2 months is, the average OI, the open interest, was around 300 million, has now shot up to $1 billion.
hmm.
And the other thing to note about the CME marketplace that's a little different from some of the other cryptocurrency derivatives venues is that, the all derivatives allow for the use of leverage, but on the CME, leverage is capped. The maximum leverage one can employ is about 3.5 times. So that means, of that $1 billion, that means that $350 million has been put in at the minimum to be able to
Hmm.
run that size of position. And if you compare that to the more, what I term, crypto native venues like Kraken Futures, Binance, BitMEX, etc., uh, those venues offer much higher leverage. And CME's, the open interest that you see on CME is now as big as any of those venues.
Interesting. So we've got open interest. We've got this indication here that institutional traders or large money traders are entering the market, and they're doing so at a higher volume or higher cadence than we've seen previously. I want to switch over to mainstream narratives because I know you deal more specifically with the business audience. Obviously, CF benchmarks, selling an index product mostly to that sort of clientele. So what are you seeing as the narratives that are resonating with that group, right? So I think in the crypto sphere, there's been a lot of conversation about macro uncertainty, about government activity within the marketplace, about having a hedge in situations like we've seen over the last year with the coronavirus. Are you seeing any of these narratives as being the dominant narratives, within those circles, or do you see others that just don't play, right? That maybe we think they're a big deal and they're not resonating as well with that set.
Yeah, I think there are a couple of narratives that resonate with the institutional investor audience. I think the first thing is that every trend, every movement needs a catalyst, and I think that um, coronavirus and the ructions that we've seen in the traditional financial markets have been a catalyst for people to take a closer look at Bitcoin. So, Paul Tudor Jones very famously back in May revealed that his hedge fund and his personal wealth is now involved in the crypto markets through exposure to Bitcoin. Um, and he talked about how at the end of 2018, he kicked off his research analyst uh, sort of kicking around ideas, and then the coronavirus hit, and market ructions and state intervention in the form of quantitative easing, etc., etc., just meant that they took a much closer look at Bitcoin
Mm,
and the hedge against inflation, the lack of correlation with traditional assets that they're traditionally invested in, that most of their portfolio is in, and and that inflation hedge coupled with the limited supply, because as we've seen, there is nothing that has limited supply
right.
other than Bitcoin. So that certainly so that I think was the catalyst. The coronavirus, the crisis in the markets was the catalyst for some of these more traditional financial players to take a closer look at crypto, to take a look at how the market has matured in terms of its infrastructure, such as derivatives, such as firms like ourselves, providing regulated pricing, etc., etc. There were just there, there's a lot more tools for that type of investor to look at and seek exposure to crypto.
Mm.
Um, and then we heard from Rentec, from Renaissance Technologies, another very large, very well-known hedge fund, with much the same thesis. And so that thesis, if you like, the digital gold thesis, that has obviously been with us for a long time, but that thesis has now got much more resonance and is much more real for
Mm.
people participating in traditional financial markets.
Yeah, I think as a market observer, and certainly there are many market participants out there wondering, they're seeing these positive signs, they're seeing the positive headlines, they're seeing investors take another look. I think the question that many people are asking is, what's the conviction level for these new participants, right? So, just my read on some of the recent announcements, right? I think we're seeing that institutions they're saying, or from what they're signaling, it sounds like they see an opportunity to make money, right? That's essentially, in many cases, their business, and I think they're also saying that look, generationally, younger people tend to be putting their money in Bitcoin, right? Which is something that they've said. But we're really not hearing maybe from that set as much about whether Bitcoin, is really something that they believe in, and that many of us in the space, do think it could be the foundation for a more sound economy or a different type of financial system. We're not really hearing that as much. Is that something that isn't resonating? Are they hearing that and just not signaling that? Just curious for your take on what that conviction level is.
Yeah, I think that, and I'd put even myself in this bracket. For those of us from a more traditional finance background, you sort of um, you're not going to call something until you see it, quite frankly. So that I think that's just everyone's sort of baseline view. You're not going to call it until you see it. But I think interestingly, Paul Tudor Jones said this, that um, Bitcoin could be one of many things, right? We're only at the beginning. It could end up being one of many things. He doesn't know where it's going to go, but he has been very impressed with some of the minds that are working on it. And as with all human endeavors, Bitcoin is no different. It really is fundamentally about the application of resource behind an idea. And given the intellectual horsepower that is behind this idea in a distributed manner, it's not Bitcoin Inc.
Mm,
This is millions of individuals all around the world from often different walks of life, who through their experiences and through, as you call it, their conviction that there is a better way to for people to store value, and transmit that value. With all of that horsepower, I think people, in the traditional financial sector, recognizes there is a lot of intellectual horsepower behind this thing. And
mm,
guess what? The endeavors with a lot of intellectual horsepower tend to happen. They
mm.
tend to work.
So it sounds like they have conviction in our conviction then, which is a start.
Yes, and well, they're impressed by the caliber of the people who have the conviction.
Mm,
Number one, and number two, we talk about market maturity. The I think that's a testament. That's evidence of the caliber of that conviction.
mm,
3 years is not a very long time, and in 3 years, a derivatives market of significant size has been built. That is okay. Has its glitches every now and then, some well publicized, um, but generally speaking, works. Operates on a pretty fair and orderly basis. And let's not forget that some of the incumbent, um, if you like, challenges that the crypto market has put upon itself because of its ambition. It is a 24/7 market. There are
right.
no, you know, in traditional finance that just does not exist. Venues, brokers, any part of the financial system, takes time off, shuts down.
Mm,
Never mind you've got weekends, you've got bank holidays, etc. Crypto does not do that. So we're talking about market infrastructure that is operating 24/7, and has done so, and has been built in just the past 3 years. That's pretty remarkable. And if
yeah.
you're an outside observer, I think it is testament to the caliber of the individuals who have that conviction.
Interesting. Well, I want to transition here now to talk about the market for alternative cryptocurrencies. So, obviously, CF Benchmark's the provider of not just a Bitcoin indices, but of many indices for some of the top cryptocurrencies by market capitalization. Thinking about portfolio construction, I'm interested in to hear your thoughts. Obviously, the narrative now is Bitcoin dominated, right? We're seeing that Bitcoin's kind of taken the lead and that it's stayed in that pole position. Are you seeing conversation about other cryptocurrencies? Are you seeing that continue at the level that we've seen it in the past, or has Bitcoin success cut into that a bit? And are we seeing less dialogue about other cryptocurrencies than maybe we saw before?
Yeah, that's a great question, because our dialogue, our conversations continues to be dominated by Bitcoin. And I think that certainly for traditional institutions, where they're playing today is Bitcoin. But once you've opened the curate's egg, so to speak, you're very curious as to what's inside. And I think the interest in some of the other coins, I think traditional institutions are beginning to wrap their heads around. Okay, we sort of have an understanding of Bitcoin. Okay, what's next? There's Ethereum, um, Ripple, Litecoin, etc., etc. So yes, we see more interest in some of our other indices. And I give you an example around the portfolio side. So we have our flagship ultra cap index, the CF Ultra Cap 5. So this index contains the five largest cryptos by market capitalization, in a portfolio that is free float market cap weighted. And we have like all indices, we have a review. We have a constituent review every 6 months, and we've just undertaken our review for November. So the review is purely a rules-based review. It's not some committee or something. It's just a series of rules around liquidity, around market capitalization, et cetera, to find the five biggest coins. And we have, in this November review, we will be removing Bitcoin Cash,
Mm,
unfortunately, for Bitcoin Cash holders, and Link will be entering the index for the very first time.
huh.
Now, that has obviously caught some of our users' attention, where they've gone, "Oh, Link, what is Link?" Um,
Right.
and so the DeFi ecosystem that Link serves, that primarily Link, that is at least today Link's primary use case, um, is now all of a sudden is opened up to a new audience of, we need to understand what is this DeFi ecosystem and how does it
Mm,
work and what role does Link play, etc., etc. Now, it's just the beginning, and I wouldn't say there's a verdict from the traditional financial space, but they are beginning to look, they're beginning to learn.
right.
Whether what their verdict will be, I don't know.
Well, that's certainly interesting, and it does say a lot that I think the market for cryptocurrencies, as many as there are, it hasn't really changed that much. If you look at the top 10 or top 20, right, we've seen that a lot of these networks seem to have staying power. Are you foreseeing that if this market really kind of gets more active again, Bitcoin's over all-time highs, VC investment starts to pick back up into alternative cryptocurrencies? Are you thinking about what it looks like in 6 months to a year if there's a period where maybe you guys need to serve a lot of demand, a lot of new indexes? What's the bar? And I guess what are you guys seeing as your role in an environment, where potentially market activity gets back to maybe where a lot of market participants want it or hope it to be?
Yeah, I mean, that's always the challenge in running a business like ours, trying to, we can only produce an index on market activity that is there. But we need to be prepared. We need to look forward and be prepared and be ready for when the market is there, when the activity is there, that we are collecting the data, we're going through all our processes to ensure that our indices have integrity and they can be used for derivative contracts, for ETFs, for funds, etc., all the myriad ways that you use an index. And to that point, we are always trying to look forward at, okay, what coins are going to see activity, see enough activity that we can launch a benchmark index to track the price of that coin. And I wish I could say that I have a crystal ball, and I wish I could say that we have some amazing formulas. Unfortunately, we don't. We just have a very large AWS bill. We just collect everything that's out there. We collect everything that's out there, and we just monitor that constantly. And then once it crosses a certain threshold, when we are confident a robust, fair market, as observed through the data that we can collect, then we can launch an index. So right now, Pete, we're at 10 assets. We cover 10 assets.
Mhm.
To give you a sense of where we think this is going, our sort of internal goals are to have 15 or so assets
Mm.
covered by the end of January,
Hmm.
because we think that that's what's needed.
Interesting. Well, coming up on time here, so wanna kind of bring it back home to some of the topics that we've touched on. So I know obviously the price very core to the CF Benchmarks business, right? You guys are the trusted source for pricing on a lot of these assets in the market and for a lot of institutional providers increasingly. What words would you have for people who are coming to this market from a traditional background and they're looking at price, right? I think some of us who have been in the cryptocurrency sector for a long time, we know that what you see on one exchange or one venue might not necessarily be what you see on
Mm.
another. Maybe you can just kind of end on a note for new people entering the space. How would you look at price? What would you recommend people do, and how do you develop a thought process where you're applying maybe more rigor than you're used to in the traditional market?
Sure. Yeah, I mean, this was a challenge for myself when I first entered the cryptocurrency space, which is, I come from a traditional finance background. So if you want to know the price of Apple stock, you go and look it up on the New York Stock Exchange. That is the price of Apple stock, but its closing price, 4:30 on New York time, any given day. That's the price of Apple. As you rightly point out, in a distributed system, crypto is fundamentally a distributed system where there are multiple trading venues, that where trading is taking place, and that trading is done on crosses in markets against a variety of other assets. So, we always talk about the dollar price, but a lot of Bitcoin trading is against other cryptocurrencies, other fiat currencies, etc., stable coins, and all the rest of it. So I would say, for those new to the sector to first wrap their heads around that. I mean, ignore what they're seeing. Just think about it in an abstract way of, okay, so this thing is traded in lots of different places against lots of different things. So, what does that mean for me when I think about what the price of it is? Um, and 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 just think about the logical consequences of that, and therefore how you need to be a little bit careful about what you read and what you see about the price of any crypto, because you need to know its source. You need to know, is that a real robust price, or was it a one-off flash trade on a
Mm.
relatively small obscure exchange that, quite frankly, is not of use to anybody. Yeah, unfortunately for those from the traditional finance world, yeah, you can't just pull up the New York Stock Exchange ticker and say, "Oh yeah, that's the price."
Mhm. Well, certainly lots of opportunities for savvy market participants out there, and risks as well. So
Mm.
thank you for highlighting that. And Sui, I would like to thank you for being on here. Anything like you'd like to add about CF benchmarks and where our viewers can find more information?
Yeah, thank you very much, Pete. No, yep, of course, our website. We publish all our indices in real time, free to air on our website. We're active on Twitter, and I would for those in the audience who have been trading crypto for a while and hold crypto, um, and may have some issues around reporting their holdings in terms of valuing them for taxation purposes, for financial reporting purposes, for those that are running businesses with crypto holdings. I'd ask them to come check out our blog very soon. We're about to hopefully publish. We're going to publish some data that will hopefully make everyone's lives a little bit easier. We all know that holding crypto does come with frictions, and CF Benchmarks has something that will hopefully alleviate some of that friction, completely free. It's just some historic benchmark pricing that we're going to publish that will allow anybody to be able to report their holdings at those points in time, those key dates, those key financial reporting dates, and say they come from CF Benchmarks. So hopefully bat away a few of the questions that we know that all crypto holders know that you get whenever you're trying to report the value of your holdings.
Yeah, certainly something to keep in mind for tax season as well, I'd imagine.
Yeah.
Thanks, Sui. So once again, I'm Pete Rizzo. I'm editor-at-large at Kraken, the best place to buy and sell Bitcoin and other cryptocurrencies. I've been your host for this live stream. We hope to see you soon when Bitcoin price passes its next milestone, maybe tomorrow. Thanks, everyone.
Thank you.